Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Agnico Eagle is soaring. This is Paul Harris for Kitco Mining at the 2024 Gold Forum Americas in Colorado Springs. Joining me today to tell me more is Ammar Al-Joundi, President and CEO of Agnico Eagle Mines. Ammar, welcome back to Kitco.
Thanks, Paul. It's always great to be here.
Always a pleasure to have you on, Ammar. Now, another great first half year for Agnico. You're settling in as the world's second most valuable gold company. How is it at the top?
Well, you know, we love the gold price, and in particular, we love all the cash flow we're generating for our owners. This is a good time to be in this space. Our mines are running well. We've got the strongest pipeline we've ever had. I've been in this business for 25 years. This is the strongest pipeline I've ever seen. All of our pipeline, Paul, as you know, are from existing assets where we have the advantage of levering off existing infrastructure, existing people. So the gold price is doing well, the company is doing well, but most importantly, our shareholders are doing well.
Well, as I said, you've had a great first half year. You're really knocking it out the park. You're hitting your production targets. Your costs are very much under control. So you've got very good margins, very good cash flow generation, and your share price is up 82% year to date, which amongst the bigger gold companies, you're really clearly head and shoulders above everybody else. We're at an investor conference. What are you hearing from the investors?
Our investors are very happy, and they should be. And you said a few things there, Paul, that are all very important. And I want to go to we've got costs under control. You know, in our last two quarterly calls, in an environment where the gold prices have been setting records, we've really emphasized cost control. Now, why would you do that in a time when things are going great? Because our investors invest in us because they want that leverage to gold. They want to benefit when the gold price goes up. So for us, it's essential, and we're demonstrating that when the gold price goes up, that money accrues to our shareholders. We've generated about $1.6 billion of free cash flow. 90% of that has gone back to shareholders either through a dividend or a strengthening of the balance sheet. So cost control is paramount, and we're doing it well, and our team is doing it well. And capital discipline is paramount. Remember, this money that we make, it belongs to our owners, and we have to be just as disciplined or more disciplined with their money at these prices as we were when gold was $500 lower.
And a large portion of mining's costs are related to the oil price in one way, shape or form, and that is trending down at a time when the gold price is trending higher. So you've got margin expansion there as well. The gold price is up, $500 or $600 year to date. With that expanding free cash flow generation, what are you able to do that perhaps you couldn't do at the start of the year? How are your sort of capital allocation priorities changing?
Well, that's an excellent question. And what I will say is they haven't changed. And that's important. The projects we're working on now are the same projects we talked to our owners about when gold was $500 or $600 lower. And again, that's important because, Paul, when the gold price goes up and we're making additional cash, again, I'll repeat myself, it's not our money, it's our owners' money. And discipline says that when you're making that kind of money, when you want to give that leverage to your shareholders, you do not want to take their money. You do not want to take their money just because you have it at higher gold prices and invest in something that really isn't very good. So I'm proud to say that the projects we're investing in now are the exact same projects we talked to our owners about when gold was $500 an ounce lower.
Some of the other large gold producers, they produce a lot of ounces, but their returns are sort of quite mediocre or middle of the road. As Agnico continues to grow and get stronger, how can you avoid the performance deterioration that seems to come with being a company of scale?
Well, I think that performance is not really a function of scale. It's a function of what's your strategy, what's your execution. Our strategy has always been very simple. We've been in business since 1957. We've had the same strategy, which is focus on regions that we know have gold in the ground and try to build a competitive advantage in those regions. That's what we're continuing to do. We're growing production per share and we're creating additional cash flow. And I will say one thing, we don't care about total size, we care about per share metric. So to your question about as you get bigger, does it get harder to grow? The real question is, as we're bigger, can we see more opportunities? And I'll say something that's unusual for a CEO in our business. If I don't find something good to do with my owner's money, I would rather give it back to the owners than invest in something just for the sake of growing.
I want to extend the capital allocation conversation. You mentioned per share metrics. Obviously, one way that some companies look to bolster that is through their share buyback programs. In fewer shares, whatever it is you're doing is divided over a smaller number of shares outstanding. What's your view on buybacks, and with extra capital coming into the company through the things we've talked about, would you potentially look to extend or expand buybacks?
We look at buybacks within the context of the bigger capital allocation decision, as you introduced the concept, and it is a means by returning capital to shareholders. Our most consistent means of returning capital to shareholders is a dividend. We've paid a consistent dividend every quarter for 41 years. Now, the thing with dividends is, and by the way, the amount that we're paying has gone up by more than a factor of 50 in the last 20 years. So we've increased the dividend. Dividends, though, you never want to cut a dividend. You might have to cut a dividend, but you never want to cut a dividend. So we set the dividend at a level where we have a high level of confidence. Cash beyond that, right now we're using cash beyond that to strengthen the balance sheet, to de-lever our investors, to give us a stronger balance sheet. We're also doing some share buybacks. We've done 70 million already. But at some point, as we're generating the kind of cash flow that we are, we'll probably do some special dividends as well.
Okay. Now, you talked about regions. You see significant growth potential in your most famous and most important region, which is the Abitibi. In Canada, you've got growth at Malartic, growth at Detour Lake. You're taking that up to 1 million ounces a year. You've got the Wasamac project you acquired from Yamana Gold that I recall in a previous conversation with you, you said has surprised you to the upside. Yep. What will the Abitibi region look like for Agnico Eagle in, say, 3 to 5 years' time?
Well, you know, we continue to be very impressed with the Abitibi. So between Detour and Malartic, over the last 6 or 7 years, we've added about 35 million ounces of discoveries at around $10 an ounce. Anywhere in the world, that's impressive. But it's particularly impressive because this is at Detour and Malartic. Those are both assets where there's an existing mill, tailings facilities, employee base, relationships with contractors, relationships with First Nations. So, Paul, these are not just great ounces found at low cost. They're in good jurisdictions, and we're able to deliver additional ounces with relatively much lower capex and much less risk. So we are very pleased with our position in the Abitibi. We think frankly, we're of the view that in the entire world, based on geologic potential and political stability, it's the best place in the world to be mining. And I'll remind our viewers, at Agnico Eagle, we produce more gold in Canada than the next 8 companies combined. So we're in a very strong position.
Now, in the Abitibi, you've got these long life assets. Is that perhaps one of the reasons why you've resisted the trend of other gold companies of, becoming copper gold or gold copper companies?
Well, we have a different philosophy. Our job is to make money. Our job is to make money by leveraging off our strengths. We have a copper JV with Teck that we're quite happy with. But we're in that JV not because it's copper, we're in it, Paul, because the project makes a lot of money. So where our peers, and they're all smart guys and we know them well, they're setting a target of, say, 30 to 35% copper. At Agnico Eagle, we're not setting a target, and whatever position we have in copper is going to be driven by opportunity to make money. So in 10 years, we could still be, right now we're about 98% gold. In 10 years, we could have some additional copper. We could have maybe a fair bit of additional copper. Will always be gold, but it'll be defined by the opportunity to make money not because we set a target of 30%.
In terms of the opportunity to make money, I wanted to talk a little bit about the strategic investments Agnico Eagle has been making in a number of smaller junior exploration companies. It's well talked about that there's a lack of finance available for the smaller junior exploration companies, and therefore if larger companies want to have deposits to develop in the future, they need to support the juniors. Agnico Eagle has certainly been doing that. What is your philosophy behind and directing your investments there?
So a big part of our job to create value for our shareholders is to operate and optimize and grow mines, and we're good at that. But another big part of our job is to find opportunities to make investments early stage where there's a lot of opportunity. And Paul, that's all about knowledge. It's all about, do you have a knowledge, do you spot them before your competitors? And do you know more about them versus your competitors? And so our strategy for decades, and it's worked, is we, in the regions we operate, we know all of the juniors, and they know us, and they like us, and we like them. And at any point in time, we'll invest in 30, 40, even 50 small companies, help them out in regions we operate. But it's really about, for us, learning more about those projects, getting that knowledge advantage so that if we make a decision to invest our owner's capital, it's based on a knowledge advantage.
Under what circumstances would one of those strategic investments turn into something more substantial, a JV partnership, a takeout, something of that nature?
So we'll often have an investment for 5 or 6 years before we go further. And in most cases, we don't go further. I mean, that's natural. But in a circumstance where we see a huge amount of upside and we understand the risks and we think we can create a lot of value, that's when we go to the next stage. Remember, that'll be off of 4 or 5 years of work on the ground, getting to know it. And that's, to me, that's really the key discipline in capital discipline is that part. Do you actually have an ability to have a good understanding, is this investment going to make money or not? Look, we'll make mistakes too, but I can promise you we'll never make a mistake because we didn't do our homework.
Okay. Now, in terms of doing your homework, I had the privilege to see your chair, Sean Boyd. He was participating in the Rick Rule Symposium in July. He was on a panel with other mining CEOs, and they were asked what other companies they invest in, and all the panelists said, reeled out their list and their directorships, and then the moderator came to Sean, and Sean said, "I've never invested in another company. I've never taken a directorship. So all my energy is focused on Agnico Eagle Mines." That seems shocking to me because it's that very singular focus is very rare in this sector. Why do you think so few CEOs have that singular focus?
Well, Sean is a very unique and remarkable individual. And for what it's worth, he's also a super nice guy. And you know Sean. And I have to say, it couldn't happen to a nicer guy because he's put his entire professional career energy into Agnico Eagle. Sean built this company. Sean and all of the people around him. He's been serious about it, and frankly, he's done very well. The share price has done remarkably well under Sean's tenure. It continues to do well, and I'll make sure that everybody knows Sean still provides a lot of constructive strategic feedback. A lot of the success we've had over the last couple of years is because of Sean and Sean's input. So, Sean's a unique guy, and it couldn't happen to a nicer guy.
There's some big shoes to fill.
Oh, I'm not. I can't fill Sean's shoes, but I'll do the best job I can.
Okay. Now, looking forward, how do you think the rest of the year, the next 6 or so months, will play out for the gold sector and, of course, for Agnico Eagle Mines?
This is a volatile business. It's impossible to predict short term. I don't know. But Paul, I've been in this business. I came in 1999. Gold price was $280. It's now over $2,500. A lot of people don't know it's actually outperformed. Gold has outperformed the S&P 500 over that time. In a time where the equity markets have had the best run they've ever had, ever. Gold has outperformed. And by the way, Agnico has outperformed gold. So all of the factors that have driven gold from $280 in 1999 to 2,500 plus today are still in place. And they're not only still in place, they're accelerating. Government deficits are accelerating. World instability, unfortunately, is accelerating. Central banks buying gold is accelerating. Debt per capita is accelerating. And so I think that all of those factors are in place. I don't know where gold's going to be next week. I don't know where it's going to be next month. But I do have a high degree of confidence it's going to, over the long run, continue to perform well.
And it looks like Agnico Eagle Mines is going to be there performing well as well. Ammar Al-Joundi, thank you very much for joining us today.
It's my pleasure. Nice to see you again, Paul.
Likewise. And we have a lot more to come from the 2024 Gold Forum Americas, so hit that subscribe button to see all our CEO interviews. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.